Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Michael Blanc. Thanks for being on the show again, Michael.
Hi, Whitney. It's great to be here. Thanks so much.
Yeah, so we're following up again from yesterday's show, and where Michael really laid out how he got started and how many people get started in the business. And Michael, is an author, entrepreneur, blogger. He's the host of Apartment Building Investing Podcast, which I highly recommend. And he's on a mission to help people become financially free with real estate. And I really appreciate his mission. And again, it was great to meet him last weekend in Northern Virginia at his live Dealmaker conference, which I also highly recommend. And it was a great event, met lots of great people, and it was highly educational, just lots of experts on stage. And but again, Michael, thanks for being on the show. And let's get right back into, helping the listener do their first deal. And so, could you just tell us, where to start again? Let's just, how to start, and let's just go through some of the steps to help the listener to really break that down into those tiny steps like you talked about.
I think the first step is that people need to overcome some of their limiting beliefs or false beliefs actually in their mind. And there's normally two of them. There's probably three or four, but two major ones, which is I don't have the experience and I don't have the money. And the people just can't overcome those in their minds. And so that's why most people didn't gravitate towards things they can wrap themselves around, which is single family house investing. So wholesaling, flipping, landlording even. And so they dismiss apartment building investing for what they think they know, frankly, out of ignorance. And unfortunately, none of those are true. You don't actually need previous experience, and you don't need your own money. So those are the two major ones. There's some other ones like, once they move back past that, they might have questions. Well, how do I analyze deals? That's very complicated. How do I even get, deal flow? I don't know how to do that. But really, those are minor compared to the first two, because if someone can't wrap their head around those two, they'll never get started.
So no experience, no money. I mean, I experienced that myself, just thinking that in the beginning, right? I can't do this. I've never done it before. I've never owned an apartment complex. I don't have enough money to buy one. And, how is somebody going to trust me or, with their money and all those things. So, how do we help that person get started as far as, okay, I'm ready to do this. I understand I don't have to have the experience or the money. What do I do next?
Well, let's take one at a time. Let's take the experience part, right? So okay. How can I be taken seriously without any kind of track record? Why will brokers talk to me? Why will investors talk to me? And I had a lunch meeting with a guy, and lives in my town, and real motivated young guy, and he was showing me his package, and it was great. But the biggest mistake he made, it was just in his bio, it was all about him. I'm like, well, who are you? I mean, you're nobody. No offense, you're nobody. You're talking about yourself and your lack of experience. Why? No one's going to take you seriously. So the thing number one is, well, first of all, the first thing you got to do is you got to educate yourself. We talked about that a little bit before. You got to educate yourself, because there's a unique language that's involved when you're doing commercial real estate investing, multifamily being one of those. But you have to know how to use the right language. So that's number one, and it's very easy. Within 30 days or so, you'll have that. You'll have that. It's not not a hard thing to do. But the second thing is you got to build your team. So and you want to build your team in a way that complements, that brings to the team that which you lack. So if you lack money, you got to have someone on your team with money. If you lack track record, you want someone on your team with track record, right? How do you do that? What people do you need? So the first person that you need on your team is your property manager. That's the absolute most critical member of your team, because that person actually does have the experience, number one. They might manage 1,000 units, 5,000 units, 10,000 units, whatever. And so that's a critical member of your team, because, what experience do you have in managing an apartment building? Well, none, but look at XYZ management company. They manage 2,500 units. They've been doing it for 20 years. They grew up in this town, whatever the case may be. And chances are, the brokers you're talking to actually know that company. They're like, oh, they're great, And so all of a sudden the conversation is now not about you, but it's about your team. And so in the same way, you want to put other people on your team. You want to have maybe a real estate attorney on your team or a CPA, but also on your team, you want maybe an advisory board. Maybe you create an advisory board of more experienced investors. And, what does that mean to be an advisory board? Well, it means that I get to use your bio, and maybe every once in a while I can call you up and ask you a question or two, right? Or if you're a coaching student, for example, your coach would be a great member of the advisory board. So sometimes you get some free advisors, and sometimes you may have to pay for an advisor. But the point is, you have this team now, and so when you make an offer, or you have a meeting with an investor, or you have a meeting with a broker, and you present your quote track record, you have 5, 6, 7 people on that thing, and you being the smallest one at the very end, right? So so you highlight all of your team members, and the conversation then will be around the extensive experience of your team, and not so much about you. So you do those things. If you educate yourself using the right language, you are competent about analyzing deals and things of that nature, and then you have a team around you, you will be taken seriously by brokers and investors. And a telltale sign, Whitney, that a broker thinks you're a newbie is when you call them up, the first thing they say is, "Hey, well, send me your proof of funds and I'll send you more information about the deal." Like when that happens, you just sound like a newbie. Versus if you don't sound like a newbie, that never comes up. It just doesn't. It very rarely comes up. And if there is a proof of funds situation, we almost always do that after we sign an LOI or even a contract, never before. So that's a tip for getting around the proof of funds situation. So that's relatively within 30, 45 days, you can overcome your lack of experience, and brokers will take you seriously, and so will investors.
So, you talked about the importance of the property management company and having them on our team right away and building off their experience. It just makes so much sense. So how do we go into that management company and them take us serious? How do they know that we mean business? We're motivated. We want to do this. However, we've never bought an apartment complex before. What's their response normally?
Yeah, so you have to be sensitive to that. The best way to use a proper management company is when you actually have a letter of intent, or when you're about to sign a letter of intent. So you don't want to call it what you need. You need a property manager to help you actually buy a building, because if you're projecting certain rents or expenses of any kind, and don't have deep local knowledge, it has to come from your property manager. So when you get to that point, you want them to go over there and take pictures, look at the roof, give you pro formas for the thing. And so you want to be light. You want to be light around that. Now the good ones are going to be motivated to engage with you, because if they help you buy a building, the chances are that they're going to actually get the contract is going to be much higher. So it's kind of like a contractor. A contractor will come over and give you a free estimate, because or help you buy a house, for example, because they might get the contract. So they're motivated to work with you. You just have to be respectful of them. Again, you have to sound educated. You have to sound serious. And the one thing that helps, by the way, is normally we assume that you're buying out of area. 90% of people are buying out of their own area. And so normally we advise that you don't hop on a plane until you actually have an LOI signed, letter of intent, or a contract signed. But it does help to hop on a plane before then. So when you have, let's say, a handful of brokers or property managers that you work with on the phone, it might be a good idea to spend a couple days in the local market meeting with everybody, because a simple act of actually spending money elevates you in the spectrum of seriousness. And so both the brokers and the property managers now can take you much more serious, because you just spent $1,000 traveling to see them. So that's kind of an insider tip to kind of accelerate the rapport building side of that.
So, let's say we're going to plan that trip, excuse me, to that market. What got us in that trip? What should we be focused on? How do we make it the most productive, time and of our money and our time while we're there?
Again, the most ideal trip is when you have something under contract. So right. Obviously, and then at that time, what you want to do is you want to interview your property managers, because you've spoken to them on the phone, and so you want to use that opportunity to meet them in person, look them in the eye. Typically walk the property with each of them, take an hour or so to walk the property, and you get their feedback, and you quickly get a sense for kind of the thinking on how they would change things, how they would address what level of turns they would do, what they would replace versus repair, that kind of things. And then you also tour some of the other properties. So, and then you of course check references, which you can do after the trip, but you tour some of the properties and see how they're taking care of their existing properties. So that's number one. Number two, you obviously want tour the property that you have under contract. If you don't have one under contract, then that would be a great time to tour the property with some of the brokers that you've established relationships with. And even if you do have something under contract, that would be also maybe spend an extra day touring all the properties in the market. Not so much that you might actually get a deal out of it, though you might, but more importantly, you're building rapport with the brokers. And the deal flow comes from the brokers. The better relationship you have with them, the more likely you're going to get off-market deals, pocket listings. So focus on, obviously, if you have a property in contract, focus on that, of course. Focus on building a relationship with property managers and the brokers.
So I would like to back up a little bit and talk about, before we actually go in there, as far as, how many deals should somebody be thinking about, analyzing before we actually submit an LOI?
That's a great question. And real estate is a numbers game. And people who've grown up in a single family house investing kind of know this. If you're wholesaling, you're sending out, 2,000 postcards or whatever. So it's a numbers game. And oddly, when people get into the multifamily space, they think they can make a few offers and get a deal. And it just doesn't work that way. So order of magnitude is this. It's 100 deals analyzed, 10 LOIs, 1 closed. All right. So 100 analyzed, 10 LOIs, and then maybe you get 2 under contract and 1 closes, let's say. So just so everyone's clear about how many deals you have to look at. So if you want to do your first deal in a year, that would be 2 deals per week analyzed, right? Which is not that much. If you have the right analysis tool like ours, we have a syndicated deal analyzer. It makes it really easy to analyze deals and make offers. Huge. I think your biggest problem is not so much the analysis piece, but making sure you have enough deal flow so you can analyze 2 deals a week. So 2-3 deals a week, not extraordinary, and that exposes you to enough deals so you can actually do that deal in that first year.
Do you suggest, things like LoopNet and to be able to analyze these deals and find deals, or just go, keep contacting brokers? How do we increase our deal flow so we can get up to that, 100 number and 10 LOIs and 2 under contract?
Yeah. So on the, on the house flipping side, we did a lot with postcards, direct mail, bandit signs. There's people who teach probates. There's of course the MLS, which in a hot market is a challenge. But in multifamily, the number one source by far is brokers. Brokers, their business is to know every apartment building owner in a particular city. They send them, especially if you ever dealt with Marcus Millichap, like if you ever owned a building, they're constantly calling you. They're constantly sending you cards about deals they have, deals they closed. They want to take you to lunch. They want to give you a free valuation of your property. And that is their business, so that when you're thinking of selling, they will know about it, right? So they've already done the hard work. So number one is focus on the brokers. That is, if you want deal flow, you literally need like 2 or 3 good brokers. And in every market, there's like some who have the majority of like the 80-20 rule. 20% of the brokers have 80% of the volume. Get to know those brokers, and you will never starve for deals.
All right. So you've helped us, with our lack of experience. You've helped us, understand, okay, we don't just post our bio out there. We have to educate ourselves, learn the unique language, build our team, the property management, CPA, attorney, and then, how important, our relationship with the brokers are. And, but now we still have that problem of the no money. Right. And so help us fix that problem also.
The no money part. Oh my gosh. I remember when I got started with house flipping, I didn't have any more money because I rolled in the restaurants, but at the opportunity, this was back in 2009, the amount of foreclosures was huge. And in 2009, about a year and a half after the recession, the retail market was really recovering. So there's this giant hole. You can buy this house for like $80,000, put $30,000 into it and sell it for like $170,000. I was like, oh my gosh, I gotta get me some of that. I didn't have any more money. So what I decided to do was to kind of go and see if someone would co-invest with me. So I would, it was 6-month loan. I would pay 12% interest. And, someone, I think my father-in-law, my brother-in-law invested. I was like, oh my gosh. And then some other people I didn't know started to invest. I was like, this giant light bulb went off in my head that I could do stuff without my own money. Like it blew my mind. And I think the biggest step in people is that, my gosh, you can actually raise money from people. I've even had podcast guests who have been very successful in multifamily space, and they didn't figure out until recently they could actually raise money. They were very successful, rolling one into another, and they couldn't even. So a lot of people don't even know it's possible. And that's the biggest thing is, oh my gosh, I can raise money from, and then you got to get over other mindsets like, oh gosh, I feel very uncomfortable taking money from friends and family. It would make for very uncomfortable Thanksgiving dinners, if I lost their money, which is true, but there's ways you can get around that. The actual probability of you losing someone's money in a multifamily space, if you're educated, you have a good property manager, is close to zero. Now, you might not make as much money as you projected, and that's fine. And that happens as well. But the downside risk, if you do all those things, is fairly limited. And once you get past that, you're like, okay, Michael, I'm on board. How do I do it? There's another issue, which is, so let's say I don't have a deal. So I can't go raise money because I don't have a deal. I say that's a problem. Now, let's say someone is dumb enough to accept my LOI and my contract, and now I have 45 days to close. There's not enough time for me to raise the money, which is also true. And they go, see, can't be done, right? It can't be done. So don't worry, we have a solution. It's called the sample deal package. The sample deal package is an investor. It's a deal package for investors. It's got real photos, real numbers. The only thing that's not real about it is that you don't actually have it under contract. Now, you tell your investors that you don't have it on contract, but the point is you use it as a conversation piece. And that deal package should approximate what you think your first deal will look like. And you take that and you present that to the investor. Here's some of the terms. It's a 5-year hold. The returns are 10 to 15%. It's about this big. It's going to be located here. We're going to have property management company XYZ manage it. And then you address their major questions, which is, well, why should I invest with you? Why should I invest in multifamily? What are the risks? And so you get these things out of the way, which sometimes can take a meeting. It could take weeks. It could take months. It really depends on you and the relationship with the investor. But the point is then you get them comfortable with this deal, and they might review the deal and then get back to you with questions. You get those out of the questions. And then you want to stay in touch with the investor. And then let's say 2, 3, whatever, 4 months later, you actually get a real deal. Well, now, and so what you want to do through using a deal package, you want verbal commitments from people. You want to say, okay, if you find me a deal that looks substantial like this, I'd be interested for $50,000, $75,000, or whatever. You want to try to get some kind of verbal commitment. And as you're tracking all your conversations you have with people, let's say you got 5 people at $50,000 verbally committed, which doesn't really mean much. At the end of the day, it's not contractually binding, but now you have $250,000 behind you, right? I mean, wouldn't that allow you to make offers more confidently for, say, $1 million property? Yeah, I think it would, right? So, yeah. And so before, I'd be like, my gosh, I don't know if I should make an offer on $1 million property. I don't have any money behind me. I mean, I would feel like stressed out. I wouldn't even make an offer, frankly. And most people don't. But if you have $250,000 behind you, you're like, man, I don't have it in the bank right now, but I think these guys are going to come through. And even if one of them doesn't come through, I can probably replace them somehow. And so now what happens is you have these verbal commitments. You get a real deal under contract. You create a real deal package, which looks substantial like the other one. You send it to your investors. They go, oh, this looks familiar. And they might have some minor questions about why is it like this or why is it like that. But they've already gotten the major ones out of the way. And so now you can raise $250,000 within a matter of days. Isn't that a much better way to go about it?
No doubt. I really like the deal package idea. I'd read your stuff a long time ago, just how you lay that out for people and make that, it just makes sense, right? I mean, and it also while you're talking to that investor, I like, it's kind of in front of you too. If you're not really familiar with talking about this stuff, when you're talking to them about it, you have the information in front of you to help you remind you even, of what to say and how to walk through it. And most of it's going to answer their questions, as you go. So you're not having to come up just kind of cold turkey, somebody asking a question, you're going to have most of their answers on the paper right in front of you.
That's right. Yeah.
So, backing up a little bit, how do we maybe find those investors though, before we even get to presenting that deal package? How do we find them?
You have to start with your sphere of influence. That's step number one. And a lot of people say, well, I don't really know anyone with money. It doesn't matter. It really doesn't, because everybody knows someone. And the first step is to kind of create a mind map of everyone you know. So every social group you're part of, work, neighbors, church, synagogue, Boy Scouts, sports, whatever it is. And then there's always people underneath that. Write down who those people are, and then become more intentional about how you speak to them. So, we're at a Boy Scout event, and we're talking to the other dads, and we're, shooting the breeze about sports or weather. Okay. get that out of the way and simply share your enthusiasm with people. You're not going to believe it. I went over to Charlotte this weekend to look at some apartment buildings, and we're getting investors, and and you share your enthusiasm with them, and they kind of go, "Whoa, that's interesting." And if they seem interested about that, well, you can continue the conversation in whatever natural way comes next. And so you become more intentional. And what you're looking for is really you want to get a series of yeses. So you never want to ask someone to get a no, because it's difficult to recover from. So whatever that yes is in that appropriate thing, it could be simply calling up someone you haven't talked to in a while and saying, "Hey, it's been a while. You haven't talked to someone in a year. You're not going to ask them for $100,000 investment." They're going to say no, but they might say, "Hey, would you be interested in just catching up over a cup of coffee?" I go, "Yeah, sure." Excuse me. And then so now you got a series of yeses. So whatever that next thing is, that's what you want to do. And eventually you want to guide them to a meeting where you have the sample deal package and you ask them for a verbal commitment.
Yeah, a lot of it's not trying to oversell yourself right away too, right? It's like just letting them know what you're doing. And I appreciate you bringing up like the enthusiasm, showing enthusiasm about what you're doing, so it sparks some interest. And then, like I said, then they're reaching back out to you instead of you reaching out to them.
Yeah, just be natural, right? Don't think in your mind, I'm gonna go out and raise money. It's like going to a networking event, pressing your agenda versus listening to the other person and building a relationship with them. Don't do that. All I'm saying is be a little more intentional with your conversation.
So now we're having that coffee and we're going to have that conversation. What are a couple really common questions that we need to be prepared to answer?
Yeah, that's great. First, remember that investors' main concern is not making money; it's losing money. So don't lead with all the cool returns you can get and how you're going to crush it and print money out of the back of the building. So don't think about that. Think of it from the investor perspective. Their main problem is, "Hey man, how do I not lose money? Tell me how I'm not going to lose money." So you're addressing things like your team, or track record if you have any, but your team, right? You're constantly addressing in the mind risk. So be prepared to talk about your team, why you have track record with your team. Be prepared to talk about what your risks are, because if I'm investing in a deal and the person and I ask them, what are the risks, and go, "Oh man, this is a sure thing. No way we can lose money." Never invest with a person like that. That person doesn't know what they don't know, right? So be prepared to talk about the risks, and then also how you're going to mitigate those risks, because the investor wants to know, okay, you know what the risks are, you're doing something about it. There's never any guarantees, but at least you've thought through that things. They're going to want to know how long their money is going to be tied up for, right? So 5 years, 7 years, 10 years. And they want to know what the exit strategy is. Well, if you tell me the money is tied up for 5 years, what is your exact exit strategy? Is it a refinance? Is it a sale? What is it? And they want to know. And then the conversation will shift a little bit more about what the returns are. Then they want to know, well, what is the cash on cash return? In other words, how much money will I make each year? And what is my overall return? In other words, if I give you $100,000, how long will it take to, for that money to double? Or something like that. So then they will be interested in the returns for that. So those are some of the questions that you'll get from investors. And early on, especially when you're doing your first deal, the terms of your investors are going to be a little flexible. So instead of saying, well, it's going to be a 70-30 split, take it or leave it, it's going to be like, well, what returns would you find attractive? I can find a lot more deals with a 10% return. But it's going to take a longer 15% return. Obviously 15% is better, but how would you feel with a 10 to 15%? And they might go, "Oh my gosh, 10%, are you kidding me? Awesome. I'll do that all day long. What about the cash on cash? Do you need the money quarterly, monthly?" So you're actually interviewing your investors a little bit more, because your investor base changes over time. Friends and family are tickle pink with a 10% return, like all day long. But as you grow your business and you do larger deals and you have to go out to more sophisticated investors, they're going to want a higher return, right? So, but in the beginning, poll your investors and see what they're actually happy with, and then give them that.
Awesome. So, yeah, Mike, I really appreciate how you've laid out how we can overcome the no experience and the no money in great detail, helping the listener how to get started. A few more questions. What's been the hardest part for you in the syndication business, or just learning this process?
The hardest part for me, I think for now, it's a continued challenge just to scaling the business. And you know, these are all white collar problems, Whitney, right now, right? So being able to raise more and more money, continuing to find good deals, those are ongoing things. But in the scheme of things, they're minor. I mean, once you've done your first deal, you're really just dealing with how do I raise more money, how do I continue finding deals, and you've already done it once before. So it's really not that challenging. I think the first deal in the scheme of things, if you ask anyone who's done deals before, is by far the most challenging. And the other stuff, I mean, every day there's a challenge in life, right? But in the scheme of things, compared to doing that first deal, it's like nothing. You just got to keep doing it and you kind of scale it up. But I think from a hard thing to do, from the one thing to focus on is definitely your first deal.
So what's something that all of us can do to improve our syndication business? Maybe one thing that you tell everybody, make sure you're doing this. What's that?
I think one thing is that we're collectively not doing well in the syndication business. And we talked about it at the event. We had Kyle Wilson talk about building your brand. And I think none of us syndicators really think about ourselves in the sense of a brand. What do you mean a brand? Well, you need a platform. If once you exhaust your friends and family, you now need to reach others. Well, how do you reach others? Well, the second step is obviously getting referrals from people. And so again, you have this one-on-one relationship with people, but then that becomes exhausting also, because you need to instead of raising $250,000, you might have to raise $2 or $3 million. Well, you need a larger group of people to raise that amount of money. Well, how do you do that? The only way to do that is to build a platform. And a marketing platform. So we talked to Kyle Wilson, who's not a syndicator, he's a marketer. And I brought him in there specifically because typically syndicators don't think about themselves as a marketer or building a platform or building a brand. But we really talked about, hey, have you considered, putting up a website? Oh yeah, I got a website. Okay, have you considered doing having an email list and a newsletter? I got an email list, but I don't have a newsletter. Well, have you thought about paid Facebook ads to drive traffic? I don't even know what that is. Have you thought about a podcast? You obviously thought about that. Have you thought about writing a book? You do all these things because you're building a platform. You're becoming an influencer, so you attract more people. And in doing so, when people listen to your podcast, as you know, or your YouTube channel, they start to get to know and trust you, right? So you're no longer doing a one-to-one. You're doing a one-to-many. People feel like they know you because they listen to you for so long. And then when you do get a deal, and you put a deal in front of them at that point, then maybe there's a one-on-one conversation at that point when you get to know them a little better. But all these things now help you scale the business up. So I think the number one thing for syndicators that we don't do well is we don't think ourselves in that sense.
So Michael, will you tell the listeners how they can learn more about you and your company?
Yeah, the website is themichaelblank.com. That's THE, Michael, and then BLANK.com, or just Google apartment building investing. And that's my website. We have a bunch of free resources. We have a YouTube channel, a podcast, blog articles. We have an ebook. And when you're done with that, we also have some paid online courses. We have coaching and that kind of stuff. And the book is Financial Freedom with Real Estate Investing, bright yellow book. Here it is. It's on Amazon. So just Google Financial Freedom or Real Estate Investing. It should come up. So that's how people can find me.
We'll definitely have a link to Michael's book and his program in our show notes. And also, Michael, would you tell the listeners just a little bit briefly about your deal desk and what that is?
Yeah, Deal Desk. If you go to themichaelblank.com/partner, you can find out more about that. But it's actually a low financial barrier of entry to this program. You just need our analyzer, which is called a syndicated deal analyzer. And currently the program is $50 a month. And it really is designed to help you become better at analyzing deals, which is the first step into making offers and getting deals. But the program allows you to submit deals to us, and then we partner with them and raise the money. So we've done now 9 deals totaling just about 1,000 units over the last 18 months in that way. It's frankly our primary source of deal flow right now. And it also helps further our mission of helping people do our first deal. And so, people are finding larger deals that are maybe too big for them. We still require them to raise some amount of money, whatever that may be. And then we raise the rest. So we're very excited about that.
Michael, thank you so much for being on the show today. You've provided just so much great content helping the listeners, to really get started in this business. You're obviously an expert in helping people and coaching them in this, getting to that first deal. And, thank you again. I hope the listeners will go to the Facebook group or the website and connect. And so we can all learn this business together from people like Michael. And anyway, thank you, Michael. And we'll talk to each of you tomorrow.
Thank you, Whitney.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.